All right, that's AB Real Estate on the back of that news flow. But on the charts, Nilesh, you put your BHEL for us. Tell us what do you see on the charts for this one? Now, all these counters have seen, have corrected fair bit. In the last 6 months, it has corrected almost 16-17%. But in the last 1 month, it has really started picking up. It's picked up almost 11% in the last 1 month. From here on, do you see this up move to continue?
Absolutely. So today we have seen a good momentum with a good breakout in BHEL. If you see the volume participation, that is higher than the average volume. The stock is making an attempt to cross its 200 exponential moving average, that is placed at 226. So we are expecting BHEL to break above the 226 mark decisively and move towards 235 to 240 from a short-term perspective. So it's kind of a 3 to 4 month kind of consolidation breakout we are witnessing today in BHEL. So with a stop loss below 221, BHEL is a buy and immediate target would be 235 followed by 240.
Okay, so those are the levels to watch out for. 240 is the upside from Nilesh. Nilesh, hi, welcome on the show. Nilesh is joining us from Centrum Broking. Let's move on and talk about a space that's in focus today, and that's the city gas distribution companies, the likes of your MGL, IGL. Shares of CGD companies have fallen following a fresh reduction in the allocation of cheaper domestic gas under the administered price mechanism, which is your APM mode, effective from today. The APM gas allocation was trimmed between 15 to 20% for these companies. MGL case in point an 18% cut coming in, which reduced the total allocation to around 40% from the current 51%. IGL and MGL have seen anywhere between 18 and 20% reduction in this, and the shortfall will be met with new well gas priced roughly 20% higher. The cut in APM gas allocation translates also into higher input costs to CGD companies, which could then result in another CNG price hike round by the companies. On the back of this, let's understand what brokerages are making of this. Jefferies on MGL has maintained their underperformed call and a target price of 1,220 rupees per share. In fact, MGL is also now very close to the target price that Jefferies has given. It's lower by almost 5% as we speak, and IGL is seeing a little less of an impact compared to MGL, nonetheless down 1.7% as we speak.
Alright, moving on then from IGL and MGL, on the back of that news flow seeing cuts. Coming to Apollo Tyres, that's up 1.5% in trade today. That's the name that you've picked out for us, Nilesh. Last 5 days, in fact, the stock has moved up 12%. Some sort of breakout that you're seeing on the charts for this one?
Very beautiful copybook style double bottom breakout can be seen in this particular counter. And even if you look at all the tire space, paint stocks, the beneficiary of falling crude oil prices, these sectors have started outperforming now. So Apollo Tyre, basically this particular stock has given a good breakout today. We are expecting a follow-up move to continue towards 460 on immediate basis, followed by 480 as a position target. With a stop loss below 440, Apollo Tyre is a buy.
Yeah. Okay, so that's the take on Apollo Tyres. We just have word coming in from Chinese officials on the entire tariff trade war that's happening between China and US. Remember, just a couple of hours ago, the White House came out with a statement saying that they are now going to charge Chinese products as high as 245% import tariff. Now China is saying that they're open to talks if Trump shows respect. They've also named a point person to negotiate with the US administration. China wants Trump to rein in cabinet members and show consistency in terms of the kind of tariffs that they are putting. And China also wants US to address concerns on Taiwan as well as sanctions other than the tariffs as well. So, lots is happening between the US and China. Remember, like I told you earlier, 245% is the highest tariff on certain goods that US is now going to be charging China, and now China has come to the negotiation table and now they're saying that they're willing to talk if Donald Trump shows some respect. So that is what is the latest on the US-China trade war, and that's the reason why both of these markets are also going to be in focus when they open later in the day today for us. Let's just take a look at this and understand what the US futures are doing right now. And Dow futures are lower by 0.2, S&P also lower by almost 1%, Nasdaq futures are lower by 1.5% as we speak. And when you take a look at Asia today, Hang Seng has closed with cuts of almost 2%, Shanghai has closed in the green. So that's the latest coming in on how these markets are reacting, but of course we'll know more once these markets open. That's going to be evening time for us in Asia, of course, tomorrow morning. But well, yes, that's the latest coming in from the US-China trade war. China ready to negotiate with Trump and the US admin if they agree to show some respect. That's the latest coming in on the US-China trade front.
All right, that's the latest coming in on the China-US trade front. But let's move on then. Gaurav, you picked out iShift Motors for us. Tell us, there is a brokerage note that's part in the stock. Tell us, what does the note say?
Well, yes, yet another counter which is in focus on the back of the brokerage note. So let's talk about Eicher Motors, because Investec has now upgraded their rating to hold from earlier rating of sell, and they have also raised the target price to 5,600 rupees versus what it was at 4,585 rupees. What they are saying is that this target price increase is on the ground of the aggression to widen the TAM, which is total addressable market, and margins are also likely to bottom out in Q4. After underperforming the industry for 4 consecutive quarters, now Royal Enfield is making a rebound. On the other hand, when we talk about the volumes, they have seen a sharp jump in second half of FY25 at around 15% growth on a YOY basis versus motorcycle industry, which declined almost by 4%. Sharp uptick in demand was led by product alternation, and that is something which is in the link of the launch of new and more affordable Bullet 350, increased marketing spends, and new variants that they have been launching. Eicher Motor is currently trading at a multiple of 26 times FY27 EPS, which is in line with 5-year average, and again which gives the confidence for the brokerage to go ahead and upgrade the stock, and that is the reason when we look at stock performance also, it is reacting positively. So definitely watching on this counter on the back of the positive note which is coming up from Investec.
Okay, so that's the reason why Eicher is in focus. Ravinder, coming to you, Oil India is a stock that you've picked out for us. Tell us what's the reason behind this.
Well, Oil India is in focus, where Oil India, which is a leading energy company in India, in a landmark stride, secured 9 blocks under OALP round 9, adding over 51,000 square kilometer to its exploration portfolio, with 6 blocks as a sole operator and 3 as consortium partner. This milestone propels Oil India's total exploration aggregates from 60,000 square kilometer to 101,000 square kilometer, registering a remarkable of 85% growth. Significantly, Oil India has submitted bids for 9 blocks and won all 9, achieving a 100% strike rate, underscoring the company's strategic focus, technical strength, and competitive edge.
All right, moving on from Oil India in that case to HDFC Life. Then Nilesh, you picked up HDFC Life for us. Tell us, what do you see on the charts for this particular counter? HDFC Life, that's almost trading with gains of 2% today. In fact, in last 1 month, 12% uptick. Last 5 days, it has given some good moves. Do you see this up move to continue?
Well, absolutely. So we have seen a good rounding bottom formation in this particular counter. HDFC Life have started forming a high top and high bottom formation as well. It is trading well above its all long term and short term moving averages. And given the kind of reversal that we have seen from the lower levels, we are getting a sense that the stock is likely to inch closer to its new record high. So from current level, the risk and reward is also favorable. 760 to 780 would be the target on the upside. So with a stop loss below 695, HDFC Life is a buy.
Okay, so that's the reason why HDFC Life is in focus rather on the charts. That's the levels that Nilesh is spotting. Once again, let's just take a look at what the US futures market is up to right now. Dow lower by 0.2%. S&P futures are now lower by almost 0.8%. Nasdaq futures continue to be lower by 1.5%. So that's the way the futures are shaping up for the US. Of course, it's on the back of the news that China has now said that they are ready to talk with Donald Trump and his administration. After a few hours ago, White House released a press note saying that they will charge China import tariffs as high as 245%. China is now willing to negotiate with the US. So that's the latest. And on the back of that, this is what the American futures market is up to right now. But also, let's take a look at what the European market is up to right now. Stock 600 lower by 0.6%. You have DAX down about 0.6%. FTSE down 0.2% as well. European markets have opened slightly lower, and this is on the back of ASML that has missed its earnings report. So you have Italy lower by 1.1%, CAC, which is your France, lower by 0.5%, and DAX, which is your Germany, lower by 0.3%. So that's what the Europe market is also shaping like right now. It's going to be interesting to see how this US-China trade and tariff war develops going ahead, and the impact it has on our market back home as well as global markets too. But let's move on. And Ravinder, you've picked out Swiggy for us. Tell us why Swiggy is in focus today.
Well, as Swiggy is in focus, the company has signed a MOU with Ministry of Labour and Employment to enhance gig and logistic employment opportunity in NCS and create over 12 lakh job opportunity in next 2 to 3 years. And under this MOU, Swiggy will integrate its gig opportunities, including delivery, logistic, and support role on the NCS portal. And this real-time integration will enhance visibility of gig jobs for NCS user, who will benefit from timely and verified work opportunity across urban and semi-urban areas. And Swiggy will regularly post a verified gig and delivery job opportunity on the NCS portal and conduct hiring through it. API-based integration will ensure real-time job postings and seamless application tracking for the users.
Alright, that's Swiggy on the back of that news flow. But moving on to Canara Bank, Nilesh, you figured Canara Bank for us. Another banking name that's doing very well, trading up 2% in trade. It has given very strong moves, in the last 1 month, 12% up. Last 5 days also it's picked up 6%. So more steam to this counter.
Well, today if you see, banking counters are outperforming, and we are witnessing good momentum in PSU banking space specifically. Within this space, Canara Bank is looking attractive. Given the kind of the formation that we are witnessing, looks like it has formed a good base formation in the zone of 80 to 85, and now it is on the verge of a breakout from its 200 exponential moving average, which is placed at 97. So we are preempting that going forward that this particular counter will break this particular hurdle and move towards 100 to 105. So these are the short to medium term targets for Canara Bank. So with a stop loss below 91, Canara Bank can be bought, and within this space, apart from Canara Bank, BOB, SBI are the other stocks to watch out for. Overall, we are bullish on PSU banks from a short term perspective.
Okay, so that's the reason why Canara Bank is in focus. But on that note, viewers, time to step into a very short break on this edition of Market Fatafat, and we'll keep it going with more buzzers in today's trade just on the other side of this short break. So you stay tuned and we'll be right back. Well, hello and welcome back to Market Fatafat. Let's take a look at some of the stocks that are buzzing. Before we do that, let's just go across to my colleague Sharad, who's standing by on a particular stock, Ease My Trip. That is in focus, as sources tell ET now that the Enforcement Directorate is conducting raids at properties related to Nishant Pitti. Sharad is joining us with more details on this. Sharad, tell us about everything that's been happening with Ease My Trip recently.
Interesting development coming for Ease My Trip, and what we are gathering from our sources is that ED raids are being conducted across locations in India. Interestingly, these locations are also some of them related to promoter Nishant Pitti as well. Now, as per our sources, more than 50 locations are actually currently under scrutiny over alleged betting scam, which is unfolded earlier, and now ED searches are going to taking place over here. Now, interestingly, no replies have come from the company to the emailed questionnaire which we had sent from ET now, and neither any reply has come when it comes to the phone call queries which we have put up to the company. Now, the promoters itself, they're having roughly 50% odd stake in the company, but mind you, these numbers are for the December shareholding pattern, and there has been some selling from the promoter side, and which they had earlier stated in the month of January itself that it was just for personal reasons. That was roughly 1.4% stake, and they had stated that they wouldn't be selling their stake in the open market. Till now, the March shareholding numbers are not out yet, so it will be very important when the company actually discloses the March shareholding pattern, where we'll get to understand what are the current pledge levels, what are the current promoter levels, and that is where the street is factoring in. But all in all, currently, what we are gathering from our sources is ED raids are happening across some of the locations which are owned by the promoter of this company.
Okay, Sharad, thanks for taking us through that. Ease My Trip lower by 7% as we speak. But let's move on from that story and once again take a look at all the stocks that are in focus today. ICICI Lombard is the next one that I wish to highlight. This is also an earnings candidate. Numbers came in post-market hours yesterday. Q4 numbers have missed street estimates, and they've reported an almost 2% decline in PAT to 510 crores from 519 crores this time last year. However, the company's gross direct premium income, that's the GDPI, grew 2.3% to 6,211 crores in quarter 4 of this year compared to 6,073 crores in quarter 4 of last year. On the back of these 4 set of numbers, Jefferies has continued to maintain their buy rating but cut the target price to 2,170 rupees per share now. Morgan Stanley has downgraded the stock to an equal weight rating. Target price also cut to 1855, and Nuvama has maintained its buy rating but slashed the target price to 2,100 from 2,400 rupees per share earlier. So that's a lowdown on ICICI Lombard's quarter 4. The earnings of missed street estimates and brokerages have also cut their ratings as well as target prices.
Alright, ICICI Lombard reeling under pressure on the back of the cuts coming in from the brokerage notes and its earnings. But let's move on to the next counter, which is AB Capital. Nilesh, you figured AB Capital for us on the charts. Tell us, what do you see on the charts coming for this one? Again, a counter that has really seen a pickup in the last 1 month. A good outperformance with 17% coming in for AB Capital. From here on, where do you see the stock headed?
Very good structure in AB Capital. I would say the stock was consolidating and witnessed some underperformance in previous 3 to 4 months now. But good recovery due to that. It has formed a good rounding bottom formation on the daily time frame chart. And in this recovery, the stock not only reclaimed its all short-term but also long-term 200 exponential moving average as well, which is currently placed at 187. So 187, 188 is a very good support for this particular counter. That should be the stop loss for the long position. And we are expecting a move towards 210 to 220 as far as April series is concerned. So looks good. Even in the futures, if you see good momentum, good breakout with good build-up on the long side can also be seen. So on the back of that, we are expecting a follow-up move to continue towards 210 to 220.
Okay, so 210 and 220 are the next levels to watch out for. Let's move on. Gaurav, ICICI Bank is the stock that you've picked out for us. Tell us why.
ICICI Bank is in focus, and let's not forget that this bank is in focus on the back of the savings account rate that they have cut down for the deposits. Now, when we look at the trajectory for the last few days, we are seeing the banks have been cutting their deposit rates. We saw HDFC Bank started this initiative by cutting around 25 basis point of savings account rate. After that, Axis Bank followed the same move, and now it is ICICI Bank. So for all the deposit, the saving account deposit below 50 lakh, as ICICI Bank will charge around 2.75% of the deposit rate versus what it was at 3%, and for all the deposits above 50 lakh they will charge around 3.25% deposit rate versus what it was at 3.5%. Now let's not forget that this is going to be a positive trigger for ICICI Bank's net interest margins going ahead, because as per brokerages this will give around 5 basis point of uptick for the net interest margins for the bank. And on back of this, we are definitely watching out on what happens in ICICI Bank. Let's also not forget that 19th of April, which is on Saturday, is when the bank will report its Q4 number. So definitely another trigger for ICICI Bank and their commentary in the quarter and the results coming ahead.
Alright, moving on then from ICICI Bank to Jio Finance. Nilesh picked up Jio Finance for us. This one's also up in a way 1.5% in trade today. In the last 5 days also, it has shown some great outperformance. It's trading up 10%. From here on, where do you see this counter going?
Well, the stock is up at 2 months high now, and multiple bottoms can be seen in the zone of 200 to 205. And today, in fact, yesterday we have seen a good breakout coming in from its 2 to 3 month consolidation zone. The stock was trading in a zone of 200 to 235. So another 20 points up from here can be seen. So roughly around 255 to 265 would be the target on the upside. And looks good at current level with a stop loss below 230. The risk and reward is also favorable. So Jio Finance is a buy with a stop loss below 230 for upside target of 260 and 270.
Okay, so 260, 270 levels to watch out for on the upside for Jio Financial. But on that note, we'll wrap it up on this edition of Market Fatafat. Gaurav, Rabinder, Nilesh, as well as Nagaraj in the previous segment, thank you so much for joining us this afternoon. It's a wrap on this edition of Market Fatafat. Thanks so much for watching.